Hey guys, this is the Libertarian Investor with a bit of a very special episode. I just want to showcase some of my predictions from just the last 2 days and see how they unfold in real time. The poly market is giving 67% odds, guys, to the fact that the Ayatollah will fall. We will see what happens, but it's my bet, and I'm making it here, that the regime is going to remain intact. How can we make money off this, guys? How can we prosper off this? Because this channel is about
one day ago.
Investing. It's about geopolitical investing. So I haven't really found a direct play, but an indirect play is that you can be sure that we're going to be seeing a lot more upheaval in that region, whether it's between Iran and its neighbors, whether it's between Iran and Israel. And so one of the things you can bet on, guys, is the price of oil. Although it looks like the price of oil may go down if we start extracting more from Venezuela, this could make the price of oil go up. So oil futures is a thing to look at. Also, gold and silver, guys. As Peter Schiff says, and as an Austrian myself, as an Austrian economist, I believe that gold and silver still have a long way up to go. It's unfortunate because that means that there is great upheaval, but I think gold and silver have the chance to rise. So gold and silver, oil futures.
Silver at 91.35 and moving up by the moment, guys. By the moment. 4,628, up 42.70 today. Gold. Crude oil futures, guys. Now they're stabilizing today, but look at 5 days. Guys, 8.12% rise in crude oil prices in the last 5 days. And 1 month we have 7.13%. I think we're doing pretty good on that. Bitcoin is holding its own again. 5 days, we're up 5.44%. We're up 5.81% over the month. And of course, we're still down 20%, but we're going back up. This is still an opportunity to buy Bitcoin. So the obvious question is, how do I do this? And I have so many more videos on my channel. In fact, I'm going to do a showcase of videos about predictions that I've had that have come correct, investments I've made, Omeros. And I'm not doing this to brag. I want to show you how I do this. And the secret is, it's so easy, even a retard can do it. And this is funny because I'm just joking, but a friend of mine in another chat group about investing showed me a meme, and this is true. Trader, if you rearrange the letters, it spells retard. So his idea is traders are retards. Of course, I am a trader, but I'm not a high-frequency day trader. I think they're talking more about high-frequency day trading. But jokes aside, you don't have to have a very high IQ to know this stuff. You do need to know the basic principles of Austrian economics and the basic principles of libertarianism, which I will put the video in the description if you've not seen it. I made a video about just a few days ago called Why Libertarianism Makes You Rich. Go back and watch that video. But as you saw, guys, in my video about the Iranian situation, of course, I'm not taking sides in this situation. To me, this is something that the United States or any of us foreigners don't need to get involved with. It is an internal matter. It's best solved by the people there. But I do want to profit off whatever geopolitical situations are happening in the world. And I gave some simple recommendations. You can see that video where I talked about gold, silver, and oil. And these are obvious, guys. And just in 1 day, my thesis was borne out. This does not happen often, by the way, guys. It's usually patience. It's usually being in for a little bit of a long run. We're talking about months. But what I want to do today is I want to just basically lay out my basic portfolio management and how I do this. I made more money last year in investing than I've ever made. And if you look at my channel, guys, I'm not playing around here. I'm not wasting time. I'm 40 years old, and I want to not have to work very soon, hopefully within the next year to 2 years. And so I am aggressively investing, and I want to show you how I'm doing it. So if you study the wealthy, what you'll learn is that they put their money into different buckets. In fact, one of the greatest strategies of wealth is to divide your money up into different buckets. And of course, I have my normal job income, W-2 income bucket. And I also have business income buckets, and I will include the business income within these 6 buckets. But of course, savings is going to be a bucket. You need to have an emergency fund. I've emphasized that in other videos. You need to pay off your bad debts. But concurrently, while you're doing that, and again, whatever I recommend to you today, it's not really a recommendation because I am not an investment advisor. I'm just a guy on YouTube, so take it with a grain of salt, improve upon it. I'm just showing you what I do, and I think my results speak for themselves. Just watch the videos on this channel, and many of my predictions have borne out. The measure of whether someone is good at something is whether or not their predictions are borne out. Some of my predictions did not, in fact, bear out, but most of them have. So I divide my basically income strategy, my investment strategy, into 6 buckets. And the first bucket is, and this is very necessary, but it's kind of beyond the scope of this channel. I'll talk about it a little bit, but a lot of it's proprietary, so I'm not going to share it with you because in some of these, you don't want to have other people coming in competing with you. And that is your side hustle / business buckets. If you can have a side hustle, if you can have a business, if you do something well that you can sell, if you can, walk dogs, babysit, sing, cook, anything like this, that's in this bucket. And these principles will apply. You want something that you can bring home a profit. You want to justify that profit. You want to have everything growing at least 10% a year. And we'll talk about this in the context of investments, but it's very necessary because you need some money coming in, and it's what I like to call permissionless income. The whole point of this is to eventually have all of your income permissionless, which means you don't need to have permission of a boss or a job to have this income. I'm not talking about passive income. That'll come. But in the beginning, you're not seeking passive income. There's so many people on the internet promising you passive income. It's not likely to happen in the beginning stages. But what is very likely to happen is you're going to have some streams of income that come in that you're not going to depend on a boss on. And what you want to do as much as possible after you've paid down some bad debts is you want to save all of that income and you want to move it into these other buckets. Now, the second bucket, and it's the bucket that this channel can really start to shine on for you, and that is the investment bucket. And these are value investments. If you don't know what value investing is, look at Warren Buffett and look at Benjamin Graham and his school. This is basically buying companies at a fair price, companies that are good, companies that are producing consistently and holding on to those, ideally forever, but trying to sell them when they go above fair price and so forth. And I think the best book for beginners is on this, is Rule 1 Investing. This book that I've gotten is probably about 12, 13 years old. And I started studying it. It's just a very simple introduction to value investing. And you can start it immediately. And they're basically, they talk about the 4 M's. First of all, you want to, and we're going to do videos on the companies that I am now watching. I haven't bought any as of late, but I'm watching them to arrive at the price that I want them to arrive to so that I can buy them with a margin of safety. But what you want to do is, first of all, you want to find a company. You're looking just at stocks and companies. You want to find one that has meaning to you, which means, is it a company that does something that you're interested enough in that you can actually become semi-expert at this company? You don't have to be an expert like PhD level. You can become an expert at anything in 20 hours. And if you want more information on that, I recommend Josh Kaufman's book, The First 20 Hours. You can become an expert at it by studying it, by reading the financial statements of the companies and so on. You can use that book by Kaufman as a guide, but it needs to have meaning to you. It needs to be something interesting to you. And Rule 1 goes about explaining how you can find those. So you want to list your interests, you want to list what you're good at, and you want to list where you spend your money. And where those meet are going to be some of the best sectors for you to look at for your companies. And then, of course, the second one is you want to have a moat. And a moat is what Warren Buffett talks about. You want to have a situation where it's not that easy for competitors to come in. And some of the best examples of this are like McDonald's, like Coca-Cola. No one's going to come in and be able to compete with Coca-Cola because they're trusted as a brand. No one's really going to come in and compete with McDonald's. They might soon, but over the last few years, over the last few decades, they have not been able to because they have a moat. He establishes in this book, and this is very important, how do you establish that this company has a moat? Well, there are 5 ways. I'm just going to go through them very quickly. You want the company to, in your calculations, increase 15% a year on average, compounding in value. That's how you're going to get wealthy. So you want your investment to be increasing by 15% a year. How do you ensure this on an average? Well, you need to look at, first of all, this company's earnings per share rate of growth. And that needs to be at least above 10%. Then you need to look at return on investment capital. And the return on investment capital needs to be at least 10%. And by the way, you're looking for 10 years. So you're looking for companies that have been around for at least 10 years so that you can go back, dig into the financial statements, or look on some of these websites like Morningstar and get these statistics about these companies and trace them back for 10 years. Of course, all you really need is the first year numbers and the last year numbers, and then you can create an average of that using like the rule of 72, and it's a complex calculation we'll talk about in another video. But you want to make sure the return on investment capital is 10%. You want to make sure that the earnings per share rate of growth is 10%. Are they really creating earnings for their shareholders? You want to look at sales growth. Are they selling more every year? That needs to be at least 10% every year for the last 10 years and rising. And then you'll measure it for a 5-year time period. Then you'll measure it for a 1-year time period. This does require a few hours of study, but it's not nearly as much as you'd fear it is. And once you get this list of companies, by the way, you only need to spend about 15 or 20 minutes a week just looking and saying, when should I buy? The 4th number that you're looking at is equity or book value per share rate of growth. And again, that needs to be at least an average 10% every single year. And then 5, you're looking for free cash flow. It needs to increase by 10% every year. Is this company able to actually generate and keep cash? It's very important. You also look at the debt and so on and so forth. This establishes has a moat. This is actually where your work begins. And this is where another great book, The Intuitive Investor, whom we've interviewed the author, by the way, comes really into its own. That is management. You need to look at management. And you need to be sure that the people who are running that company are people you trust. So you've got to study them, who they are, what their philosophy is. What do you think their philosophy is? And what are your feelings about them? And when you do that, you'll come out with an intuitive sense for, should I buy the company? The company could be perfect. I mean, Jason Apollo Voss, who's the author of this book, The Intuitive Investor, talks about the fact that he met the CEO, I believe, of Bear Stearns, which was doing great, but they were one of the companies that went under in 2008. And he said that the CEO struck me as a constantly agitated Napoleon, and therefore I did not feel that I should invest. He dodged the bullets there. The same in Enron and companies like that. So it comes down to the people, guys. Do you trust the people? Do you feel good about the people? It's very important. And then number 5, you want a margin of safety, which just basically means, and there are calculations for this, we go into it in another video, but you want to calculate what a good stock price would be for that company based upon earnings of that company, based upon quality. It's usually 10 times earnings. And then what you want to do is you want to deduct 20 to 50% from that price, and that's your margin of safety. That means you can buy the company and still make a mistake and still be safe because you're buying it for under earnings. And a lot of people are going to say, well, you can never find deals like that. You can. In this recession coming up, you're fixing to be able to find really good deals. We're going to make a video about that. That's the value bucket. It's sort of boring investing, but it's very important nonetheless. Then the third bucket that we talk about on our channel is my favorite bucket. That is the trends, geopolitical investing, investing according to what trends you see around you. And this really, at first glance, has nothing to do with the fundamentals of the company. While in the second bucket, we're looking at the fundamentals of the company. In this third bucket, you're looking for trends. Okay, is a certain product taking off? This is Chris Camillo's basically social arb investing. This is also geopolitical investing. What's going on in Turkey right now? What's going on in Russia? How can we make money from this? And then what you do is you will usually look at a company that stands to benefit from whatever trend is going on. For example, Omeros was that kind of play where we saw that this new transplants drug stood the good chance of being approved, and the stock would rise, and it did basically rise hundreds of %, and I made tons of money by doing what? You don't necessarily directly invest in the stock while you can. What I did was invested in call options. That is a strategy that you use for this bucket. But the rule for this bucket is you only use money that is sort of set aside for speculation. Benjamin Graham talked about it. You invest your life savings in the second bucket. That's a pretty safe bucket because you're waiting until the stock gets to a price where it makes sense to put a lot of money into it. And there's still risk, but you manage that risk. In this bucket, there's great risk. There are a lot of things that could come and unexpectedly happen to make your investment thesis, render it useless, and to fail in that investment, lose all your money. So you want to lose money that, I'd hate to say it like this, but you can afford to lose. But this is going to be the bucket where you see your most massive gains. It's basically what this channel's about, and I talk about my positions in that investment bucket, that speculative bucket. Number 4, this is the inflation bucket, and that bucket is basically going to go into gold, silver, and cryptocurrencies. In my case, it's mostly Bitcoin. These are monies that stand to increase massively during times of uncertainty, during times of inflation. And even if they don't, even if those times don't come, eventually you will recoup your value because gold and silver is historical money. Bitcoin is not, and I'm going to share another video about crypto, how my thoughts have evolved on crypto from an Austrian standpoint. But Bitcoin is still an inflationary hedge because people think it has the qualities of gold and silver, while in the long term, I do not believe it does. And what I would like to see eventually is a blockchain type currency that is tied to gold and or silver. The 5th bucket is your commodities bucket. And this sort of relates to the inflationary bucket, but it is more broad in the sense that there are more factors that move commodities, and we'll talk about that in other videos, but we haven't done much investing in commodities. I did about 2 years ago, but I did not put it on the channel. We will put it on the channel when we have occasion to come to that. But it's very important to have this bucket, the commodities bucket, as part of your overall strategy. And then the 6th bucket, guys, is of course a retirement account. And those are good because you are putting away for the future, and there is delayed taxation in those buckets, and perhaps you'll only have to pay tax when you remove the money. We're not really big on that in this channel, but we recommend that you try to participate in that bucket as well. But guys, these are my buckets of investing. We'll be talking about it a lot on the channel, a lot more. But again, this channel is more focused on the 3rd bucket, which is that speculative bucket, which are these bets that we put on in anticipation of global events. And for all of these buckets, a knowledge of Austrian economics is essential, and a knowledge of libertarianism is essential. So guys, we've been right. Keep following the channel. If you have any advice also on any of this, please do subscribe to the channel, comment, like the videos, and participate in this community. So until very soon, guys, this is the Libertarian Investor bidding you a wonderful night.